Good afternoon, ladies and gentlemen. My name's Steve West. I'm the Finance Director at African Petroleum. I've got to say that's quite a sobering presentation to follow on from as an exploration company in West Africa looking at farming out at the moment. If we flick through to the first slide. So I'm here to talk about why I think African Petroleum is such a good value proposition, to talk about our acreage, talk about our strategy going forward, and talk about where we see ourselves in 12 months, 18 months' time. So in terms of the company, we have a very large acreage position in West Africa. We're in 5 countries. We've got 10 licenses. That is over 30,000 square kilometres of acreage, so huge footprint in the area. That flows through to a very large resource number, so we have 12.5 billion barrels of oil resources split over the various licenses that we have, and that's quite a key point. It is a very diversified portfolio, so we're not concentrated in one country. We have very strong relationships with all the governments that we operate in, and that's been demonstrated through getting license extensions and all the licenses that we operate in. We've done that in the last 12 months. What gets us really excited, though, is the work done by others in the region in the last 12 months. So we've had 3 1 billion barrel discoveries right next to our acreage in the last 12 months. So there was the Total discovery down in Ivory Coast, which is right next to our acreage. And then in Senegal, which I believe was talked about earlier today, was the SNE-1 discovery and the FAN-1 discovery, which are each 1 billion barrels in place as well. So to us, that has really opened up the area, and we can see analogues all the way through our acreage, which I'll show you a bit later on in the presentation. We have been in the region for quite a while, and because of that we have early mover advantages. We have very good fiscal terms, and generally we can say that it's a very benign operating environment. We're not subjected to hurricanes or bad weather or anything like that, and once we get into the geology, it's very simple geology. We don't have high pressure systems or anything like that. So we think it's a great place to be. We have given an indication here about drilling costs being less than $50 million a well. We honestly think we can probably get them down for about $14 million a well in the current environment. It is a lot cheaper than what it was 12 months ago, as I'm sure everyone's aware. We have a proven deep water operator in the region as well. We have drilled 3 wells. We have covered all the licenses that we do have in 3D seismic to get us drill ready on every single license that we do have. And in terms of the forward work program, the key for us is to get drilling again. There's been a bit of a hiatus from when we were drilling last time. The last well we drilled was in, I think it was February 2013, so we want to start drilling again. Obviously we need funds to do that, and to do that we are going through a farm out process at the moment, which I can say has been helped tremendously by others having discoveries nearby, so we're very happy with that. In terms of where we're listed, we are listed in Oslo. Well, I say primary listing, we do have a secondary listing in Australia as well. We listed in Oslo in May last year. The key reason we chose Oslo, we do get asked, why did you choose Oslo out of all the markets in the world? We did choose it because we're a little bit different to others out there. We had a very strong institutional shareholder base. And you can see the shareholders that we have here. So very, very strong on the institution side, but the retail side was lacking, particularly down in Australia where we were listed. So in Norway, they have a very strong retail base. And that's flown through on our share price, not in terms of the share price, sorry, in terms of share trading. So liquidity-wise, we've traded over 900 million shares this year. So we're very, very liquid. I think we're one of the top 3 most liquid stocks traded on Access in Oslo. So we have a very good following there. In terms of the team, I'll brush over this quickly. Stuart Lake, he's our CEO. He's key to us getting to the stage of drilling and realising value from our very large resource number. So he joined us in February last year. He's from Hess Corporation, before that Apache, and before that Shell. He's got an amazing track record. I've never seen anything like this. He's drilled over 300 wells. He's an 85% hit rate. The most relevant for us is he's drilled 7 offshore wells in Ghana when he was with Hess, and he had a 100% hit rate there. So he knows the geology. He's a successful driller. We just want to get him drilling. We want to try and get that average up to 90, 95%. In terms of the other team, we've got our COO, Jens Pace, who's BP Heritage. He's been with the company for a few years now, and he's He's a good guy to have in the team. And we've got Mike Barrett as the Exploration Director. Again, Chevron heritage, and also briefly at ADAX. Myself, accountant by background. I've been with the company since October 2013, doing upstream for about 15 years or so. And we've got our general counsel there as well. In terms of where the acreage is, so we are, as I said, in 5 countries. I think one of the takeaways from here is any one of these countries in isolation is a company maker for a company our size. We've got 5 of these repeated. And I'll talk you through in more detail this acreage that we have a bit later on in the presentation. In terms of acreage position, I did say it's a very large position. We are number 1 in all countries except for Côte d'Ivoire, and that's because we got into the country a bit later on than the other countries. But I think the main point here is who else is in the area. I mean, there's some very well recognised names here, not just the large majors, but there's also some big independents. Importantly, I think Cosmos, they came back into the region, I think it was September last year. So that's a very important sign, I think, for where we are in West Africa. And ExxonMobil came into Ivory Coast in quite a large way in December last year, and that was after the oil price crashed. So that was very much against the general rule of all the majors pulling out of exploration. So I think that's quite important as well. Growth strategy, I won't labour on this, but we're an exploration company. We're focused on West Africa. We're going through a partnering stage at the moment. We're trying to bring partners in. Delivery on milestones. This slide here is pretty much, what we're trying to draw out here is we did have a management change out. So we had a company which was listed back in 2010 with 1 asset in Liberia, which has been built up to a company in 5 countries with 10 licenses. There was a call by the shareholders to replace management in 2013. So myself came in as finance director. We had Stuart Lake come in as the new CEO. We had a new chairman come in as well. So we're part of the new management team. We wanted to set out exactly what we're going to do in the next 12 months, and we wanted to be able to sit down in front of our investors and tell them that we'd done it. And we're very pleased to say that we can say that. Last year was a very good year for us. It was pretty much getting the house in order. We raised money, we listed the company, we extended all our licenses, we reignited a farm-out process, and then this year we've done some more private placement. We've upgraded our resource numbers. But the key for us really is that third item. That's completing farm-out transactions. After that, everything should follow after that, and we're very confident we're going to do that. Now, I'm sure this has been covered to a certain extent earlier today, but for us, this is the time to invest. I mean, everyone's focused on the low oil prices. They should be for oil producers. We're not a producer. We're an exploration company. The costs have dropped dramatically. We've seen rigs out there for $300,000 a day, which would have cost us $750,000 a day 12 months ago. So there's significant cost savings out there to go and chase down the resource base that we have. And you can also see it coming through in the seismic rates as well. In terms of how does the oil price actually affect us? Because that's quite a common question we get in this type of environment. Is our resource base actually worth anything when it's $50 oil? Well, I can say yes, it is. We've done our own internal work here, and we've taken a 250 million barrel discovery, and we've sort of worked that through the different countries we're in, the different fiscal terms. We've taken Wood Mackenzie costs, and we think we can break even at these levels here. The difference between the countries all comes down essentially to water depth. Sierra Leone, as you'll see a bit later on, is ultra deep water, whereas the others are deep water. The key reason for this actually is the contractor share. So it's very high compared to other countries like Nigeria or Angola. Now, this is my favourite slide. It's not our internal lawyer's favourite slide, but it is dramatic. I get that, but what we're trying to illustrate here is we are, in our opinion, a very undervalued company for the portfolio that we have. Any discovery that we have around the 500 million barrel mark is going to have a significant effect on the value of our company. That's what we're trying to get across here. Obviously, there's a funding risk in here, and that's why we're not valued at that big bubble there. We get that, but we're trying to close that funding risk at the moment by doing farm outs. We've made significant progress down that road. In terms of growth of resources, that's set out there. You can see that's grown significantly as well. I mean, we could probably come up with a bigger number again in 12 months' time, but it's almost irrelevant. It's a very big number, and it's split all around the 5 countries that we're in as well. key for us is not to increase that number, but to rather try and realise the value from what we have already and start drilling. Now, in terms of prospects and plays, I think in the previous presentation, the West African transform margin was referred to as a disaster. We don't think so, and it depends on where you are, essentially. We think where we are in the West African transform margin is still very prospective, as illustrated by our resource numbers. But what we're trying to draw out here is the different play systems here. So the West African transform margin play is on the top diagram up there. The one on below is the carbonate play in Senegal and Gambia, which has been opened up recently by Can Energy. The one on the top is pretty much transferable all around the world, more or less. So it's a very simple concept. Now you can see the migration of the drilling as well, the exploration drilling. They were starting out in very shallow water to the right of the diagram. They outstepped a little bit into more deeper water. And they had oil shows, but where we think the real play is out in the deep water there. So we think the sands get better there, the reservoirs better, but also you can thread the drill bit through multiple prospects as well at the same time. So it's a lot better target to go for. In terms of the prospects, I think this is quite a key graph. It illustrates the number of prospects we have. So we think we have over 30 drill prospects. I don't think many companies can say that. And it also illustrates that it's at different levels. It's not at one level, it's at different levels, at different sizes, different risk. This is an incredible portfolio. And in terms of activity in the region, so obviously we monitor this as being a small cap company. We're very interested to see what is happening around us. So we've had Cosmos entering the area, which I've already touched upon before. We had ExxonMobil coming in as well. But the key for us is the discoveries. You can see how close it is to our acreage. We've got the Total discovery there in Ivory Coast, and we have the Can discovery up in Senegal. And if we jump into the licenses that we have, the countries that we're in, so Liberia, where we have about 4 billion barrels of oil resources. We have drilled 3 wells here historically. We do have one discovery, which is the Narina 1 well. We have a signed term sheet to farm out one of our licenses here, the LB08 license, which we're working towards hopefully closing out in June this year. And we're very much looking forward to getting back to work in Liberia. There's been a bit of a hiatus here because of the unfortunate Ebola situation down there, which is horrible for all concerned, but that looks like that's almost cleared up, and we're looking forward to getting back to work in Liberia as soon as we can. And this is drawing out where the wells were drilled historically, and where we would like to drill our next well, which is in the sweet spot. Côte d'Ivoire, this is probably the most near-term excitement in our portfolio, and this is certainly where we'll be drilling first. The aim is to drill here in December this year. Now, this little green blob down here that looks like it was drawn by my 6-year-old daughter is actually, we do actually have seismic for that, but we can't show it because we trade data with as many of these companies as we can. So we can see the same similarities coming through to our acreage here, and we're very excited to start drilling here. And you can see the green dotted line there, that's the fault system that everything's getting trapped against here. And I can't stress to you how excited we are about getting back into here and drilling this up. And we are in very good discussions with potential partners to assist us to do that as well. So we have 2 wells in the next 18 months here. We're going to drill in December in 513, and we're looking at drilling in 509 in March next year. This is one of the prospects here. It's 800 million barrels. Very, very nice looking prospect. And another prospect, 400 million barrels. We just selected 2 of the many drill targets here that we have. This is just in one country, I stress, as well. So Gambia and Senegal, this is probably what people are more familiar with. Everyone's heard about the Can discoveries in Senegal. Very significant. I think the SNE-1 well was reported to be the largest oil discovery in the world last year. We're very happy that's 6 kilometres away from our nearest prospect. So it really has opened up this whole area for us. And we've just published our resource numbers on Gambia, which has been updated post these discoveries, and that's now at 3 billion barrels. You can see we have the acreage to the north, the green shapes of the discoveries. We have the acreage to the north and the acreage to the south as well. And we focus in on Gambia here. Our acreage is littered with prospects here. If I was going to pick a prospect we're going to drill straight away, I'd say the Mahogany one is the one we'd go for. There's a slide, one of these slides in a minute, shows the analogues between a Mahogany and the SNE1 well. We think that's a very large prospect to go after, and that'll be the first one we drill. We're looking at drilling in Gambia, hopefully by August next year. This is the Mahogany prospect and the analogues here. Even though I'm an accountant and I can see that, so hopefully the geologists can see that as well. And we have some more plays there. Sierra Leone, this is ultra deep water. So the other countries, all the other countries we're in, is all accessible now. It's all at around anywhere from 1,500 metres to about 2,400 metres. This acreage here, which I'm going to show you in a minute, is at about 3,500 metres. So this is not quite accessible for us yet. I believe the deepest well in the world is drilled at about 3,200 metres at the moment. We don't want to be the first one to drill at 3,500 metres. We don't have a drill commitment here until about 2017 anyway, so we're quite happy to sit on this. But this is our blue sky. Not that we need blue sky, I don't think. But the prospect here is the Vega prospect. We believe that's around 3 billion barrels. That's a huge prospect. If Stuart was here, he'd be dancing around with excitement. He loves this prospect. Generally, this is just a very general view of what our strategy is. We want to partner. We want to fund the well drilling program going forward. We want to drill two wells a year. Based on our current inventory of drill targets, if we were funded, we could drill for 15 years, 2 wells a year. And in conclusion, just finishing up, so the assets, great assets, diversified over 5 countries, very large resource number, 12.5 billion barrels. We've de-risked that through the work we've done ourselves, but also through discoveries nearby. That's been very, very important for us. Very capable team. We've got a team, the senior management, with over 120 years worth of oil and gas experience from the top 5 people in the team there. That's important. We have a very strong institutional shareholder base. So we've just raised $12.5 million in February this year. That was probably one of the worst times I've ever raised money in my life, I have to say. But we managed to do it, and we did it because we've got very supportive institutional shareholders. We have no debt, and the growth potential on our company, I feel, is significant. The value gap is a no-brainer to me. There's obviously risks associated with that, I'd have to say, but I can see the growth potential there. And the key for us is to close farm-out discussions. We're given guidance to the market that we'll close our farm-out discussions the first half of this year. So in the next 3 months, we'll be announcing farm-out deals. That's very important for us. So thank you very much.